name is Lena Castanos, and I will be moderating today's webinar. I will begin by introducing the Capital Pathways program. Then I will introduce myself and give it the word to our guest speaker, I can't speak this morning. Rashard Todd, Business Community Manager at City National Bank, who will introduce himself and take us through a presentation on what lenders look for in your loan application. Feel free to ask any questions through the Q&A function throughout the presentation. We will be responding to them as we go. The questions that we cannot respond to in this webinar, we are happy to address through our no-cost one-on-one services or connect you to resources that can help. We will share a recording and slides of this webinar afterwards. So, what is a Capital Pathways program? It is a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We can start with the program overview, then we will go through the program eligibility and finalize with its services. Capital Pathways is a no-cost specialized SBDC program that helps small businesses build the systems and habits needed to become capital ready. Why does it matter? Being capital ready matters because those less prepared self-select out or fail applications. Early failures correlate to lack of adequate capital. Higher cost alternatives don't build long-term capacity. Only half of requested amounts reach small businesses. To put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, just 20 to 30% of those who apply for loans actually get their loans approved. Capital Pathways creates a path to financial and legal readiness. Our program offers an immersive hands-on group experience paired with one-on-one support. Who is eligible? Very small businesses at any stage facing challenges accessing traditional financing. The services that we provide include guided self-assessment, legal structure validation, financial skills and tools, and loan application readiness. We start with a self-assessment that pinpoints your business key gaps so we can connect you with the right tailored resources either through our Capital Pathways program or other resources that can help. Under our legal structure validation, our in-house advisors can help you through more basic legal questions, and we partner with a law firm which can help you for more complex topics related to business registrations, trademarks, and contracts and agreement reviews. We also offer financial webinars on topics including financial basics, financial statement preparation, and QuickBooks training. Another one of our offerings includes one-on-one individualized and tailored support on business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, and loan readiness and lender prep. Finally, our loan application readiness services include both webinars and one-on-one individualized support. The webinars are on topics such as what lenders look for in loan applications, like today's, interactive mock loan interviews and sample application analyses, and webinars such as SBA loan options. We have a partnership with a lender that provides one-on-one supports to those looking for capital. If you are interested in getting started, you can reach out through our website at virginiasbdc.com/program/capital-pathways. Or you can also reach out to me directly at lcastano@gmu.edu. I will send my email and website link in the chat for all of you to have. Now over to introductions. As mentioned before, my name is Lena Castanos and I am today's moderator. I have a professional background in economic development, small business support, and access to finance projects domestically and internationally. I am currently both a program lead and a business advisor in the Capital Pathways program. Today's session will consist of a 60-minute presentation. Again, feel free to ask any questions throughout the presentation via the Q&A function. We will be responding to them as we go. We will also leave some room for questions in the end. The questions that we cannot respond to in this webinar, we are happy to address through our no-cost one-on-one services or connect you to resources that can help. We will share a recording and slides of this webinar afterwards. Now, I will give it over to Rashard to introduce himself, tell us a bit about his background, and start his presentation.
Thanks so much, Lena. Virginia, good morning, everyone. I'm Rashad Todd, Vice President and the BCM. BCM stands for Business Community Manager over at City National Bank. I want to first thank the Virginia SBDC for allowing me and my team to present on behalf of CNB this morning. So my goal is very simple, and before I get started, my background in commercial banking is I have 7 years in commercial banking. 1 second, let me get my strings together. My apologies, guys. So yes, I have 7 years in commercial banking. Started my career out at PNC Bank. Got started at M&T Bank on the corporate side, and I've been with City National Bank since this past April. So again, my goal is very simple. I'm going to take you behind the commercial underwriting curtain, so you know exactly what lenders look for and how to prepare your business to access capital with confidence. So by the end of this session, excuse me, you will understand the story and the numbers that banks expect, when to seek financing, how to match the right loan to the job, why cash management matters. Again, my apologies, sorry. Why cash management matters. Excuse me. And that's it. Let me go ahead and change the slide. Okay, first, it's our roadmap. What do banks look for? We will cover two lenses. Every underwriter uses your story and your financial performance. Second, when should you seek financing? I'm going to pretty much birth or bust the myth as you only borrow when you're in a pinch. Third, financing, the purpose and the type. I'm going to pair the right credit tool with the job to keep your balance sheet looking healthy. Fourth, what is cash management? I'm going to connect your AR and your AP, that's your account receivables and your account payables, and the efficiency to turn that into real dollars. And finally is your business ecosystem. Your team around you that makes capital access faster, easier, and more predictable. Everything points back to one thing: capital readiness. In my opinion, preparation is the difference between a fast yes and a frustrating no. Change the screen. Okay. When a lender evaluates your business, they look through two main windows. That's your story and your financial performance. Let's start with the story first. You want to tell the banker, the branch manager, anybody at the bank you're talking to, you want to tell them, why did you start your business? What problem does your business solve? What is your business vision over the next 12 months or even over the next 3 to 5 years? Your story and your vision helps the banker advocate for you with underwriting. It pretty much explains why, if any bumps in the road does not define your business future. Next is your management experience. What expertise do you have in this industry, and what makes your leadership credible in this industry? Third would be your operations. You want to walk your banker through your business money flow. How does your business generate revenue? How do you invoice? How do you collect? What are your business biggest expenses? How long does it take you to get paid? Clear operations make it easy for the banker to size the right credit tool. Excuse me. Fourth will be goals and your objectives. You want to be very clear what your goals are to the banker. For example, if you have plans to purchase two vehicles in quarter 4, if you have plans to acquire a building in the next 15 months, when a banker knows what's coming, he can proactively structure the credit and plan for any tax and plans with your CPA and keep your business bankable. Lastly, would be the competitor intelligence. You want to pretty much be able to tell your banker or the branch manager who else is servicing your customer in that market. And if you can show how you can win the market share, it will give your banker a stronger case when you present your deal to an underwriter. Now let's get over to the financial performance side. So banks like to use the 5 C's of credit. That is capital, character, capacity, collateral, and the last, conditions. When it comes to your character, excuse me, your entire personal background and personal credit matters. For example, when you apply for a loan, the bank or the banker will sometimes Google your personal name. And if anything comes up negatively, that will be reflected to the underwriter. When it comes to personal credit, here's some key mistakes that a lot of clients or prospects make or overlook. Is your late payments, is also mixing personal and business and not properly filing your tax filings. To fix that, auto pay, separate accounts, and confirm with your CPO bookkeeper that your tax documents is clean and everything has been filed accordingly. Next will be capacity. That is your ability to repay from your business cash flow, not just your sales/revenue. Banks look for consistent coverage of annual debt payments. Some key mistakes is always pointing to your revenue and counting them big one-time wins and ignoring your business seasonality if you have one. To fix that, you want to show the banker at least a year or 2 years of your fiscal end P&L and explain any industry seasonality. Again, if you have it and you want to show a line of credit, if you have it, that can bridge that gap for timing. Third would be capital. Capital is the owner's money at risk and any cash reserves you have. Some mistakes with that would be pretty much expecting 100% financing with no skin in the game. To fix that, you want to show some equity that you invested in your business. And again, keep at least 2 to 3 months of fixed costs in the deposit account. Excuse me. Collateral. Collateral is any asset that's backing the loan. It can be equipment, it can be vehicles, it can be your AR, it can be real estate. Some key mistakes with that would be pretty much overvaluing your assets. Any messy titles, no insurance. To fix that would be having your assets properly valued so you can understand each asset useful life. If it's in real estate, you want to get it appraised and understand that property's true value. Lastly is conditions. Like your industry trends, if you have any customer concentration, understanding your local economy, and key, this is very key, understanding if your industry is your current bank's appetite. And I will talk more about that in a second. So sorry. go back and we talk about conditions again, in case anybody missed that. My apologies. Conditions, that's your industry trends. Again, if you have anything more than 10% of a customer concentration, local economy, and understanding if your industry is your current bank appetite. Again, the mistakes that I see a lot of times is having one big customer with no plan B. To fix that, you want to have a pipeline that's very diversified and steps to mitigate any risks if it's involved from trendy sales, revenue, things like that. Now, I'm going to back up and talk more about your personal credit because a lot of clients tend to think that when it comes to business loans, your personal credit does not always matter. That is false. When it comes to business lending, your personal credit is very important. It signals character and payment behavior. Again, most small business loans will use a personal guarantee, which is also called a PG, and your personal score affects your approval and your rate. Excuse me. Now, here's a very important note when it comes to capacity and collateral. Banks just don't always look at how much you own or how successful your business really is. They look for a balance in your entire financial picture. If too much of your wealth is tied up in one sector or it's in illiquid assets, it can pretty much limit the flexibility and make lenders a lot more cautious to lend to you. That's why personal liquidity matters. Cash and cash equivalents shows the bank you can meet all your obligations quickly without selling any assets. For example, you can have 7 to 8 figures in assets, but without any accessible liquidity, your profile looks riskier than someone who has fewer assets but more cash on hand. So the key takeaway is it's not only how much you own, it's about having the right mix of assets and liquidity so you're always prepared for both opportunities and anything that comes your way as a challenge. Next will be, apologies, when should we seek financing? The best time to apply is when your business profits and cash flow are solid. Your books are clean, you can show a clear use of funds, and you want to always apply from strength and not from a crunch. Some real life examples would be if you're a seasonal retailer, you want to apply in, let's just say July or August for a fall line of credit to purchase inventory. Then you want to draw on a line, let's just say October or November, and then pay it down before the end of December when sales convert to cash. If you are a contractor trying to acquire a new contract, before mobilizing, let's set that line of credit in place for payroll and materials. And then you want to draw at the kickoff and then pay down when the invoice comes. Let's just say you're also a professional service firm looking to add additional employees. Use that small line of credit to fund the first 90 to 100 days of the ramp-up period. Also, if you're doing that method, show the banker that 3 to 4 month day plan before you apply that method, and then you're going to pay that line off as it begins to roll. If you're trying to acquire an owner-occupied building, you can start using the SBA 504, and you want to have those discussions at least a half a year out before your lease ends to get better terms and avoid rushing. Some key myths to avoid is I'll wait until I need it. That's when approvals are slow and terms get tight. I need perfect credit. That's not always true. Could also have the SBA. And this is one that I hear a lot. No collateral means no chance. Again, not true. Some lenders do have cash flow loans, And also the SBA 7A program is also an option as well. Now, here's some two key words to remember. One is working capital, and the other one is liquidity. Working capital, or WC, is your business day-to-day fuel of the business. It's the current assets minus your current liabilities. That's your cash, your AR, and your inventory minus your account payables and any short-term debt. Liquidity is the cash or near cash that you can tap into quickly without disrupting your business operations. Okay, now we have the financing purpose and the type. I'm gonna give you guys three definitions, quick ones. We're gonna have a term loan, a line of credit, I talked about previously, and DSCR. When it comes to your term loan, again, the term loan is a fixed loan that is paid back over time. Each payment reduces both principal and pays the interest at the end of the term. When that happens, the debt is completely gone. A line of credit is a revolving line you draw and repay. Many lines of credit are interest only while you are using them, so the principal doesn't automatically goes down unless you pay it separately. Now, DSCR stands for Debt Service Coverage Ratio. That's your business. It's pretty much your business DTI. So it's your business ability to make loan payments. How banks get this, how banks determine your DSCR is, again, it's the cash available for your annual debt service divided by your annual debt payments. As so for every dollar of your annual debt payments, how many dollars of cash flow do you produce? Most banks want to see a 1.25 times or better. Now, let's get into short-term financing. Short-term financing covers the needs you will pay back within 12 months or less. Things like payroll, inventory materials, and any other operating costs. The right tools will be a line of credit or commercial credit card. They are both revolving and they are often interest only while in use. And they are meant to be paid down as the cash comes in from your customers or from your AR as their payment source. Many banks would like to ask for an annual or brief annual clean down where the line goes to zero to prove it's actually working capital and not a permanent loan. And that's key because let's just say you have an outstanding balance on your line. Doesn't matter if it's 5,000, 10,000, $1,000. If that balance is pretty much outstanding for more than 12 months, that lender will term it out. Terming it out means they will take that outstanding balance and they will apply it to a term loan. It can be 2 years, 3 years, even 1 year. Now, also when it comes to short-term financing, the right way to utilize will be again, if you're a seasonal business and you're buying inventory, you want to use that revolving line and draw it for inventory, of course. And then when you get your money back, you want to pay it down to zero. Now, the wrong way to use a short-term financing tool is say you buy a 5 or 7 year asset. And in commercial banking, that's very common. And you put that asset on your line of credit. When you do that, the principal will linger because that asset will depreciate faster than you can pay it off. That's classic over leverage, meaning you have too much debt on your balance sheet. Now, let's talk about long-term financing. Long-term financing pretty much covers anything that's beyond 1 year, like vehicles, equipment, tenant improvements, and real estate. The right tools will be, again, 7A loans, SBA 7A loans, SBA 504 loans. But the key is you want to make sure that the payment is applying to both the principal and is paying the interest. Because you want to have the useful life for the asset and the loan term should always line up. So when the debt declines as the asset depreciates, a golden rule I always tell my clients is, again, one more time, you want to match the repayment term to the life of the need. A short-term need needs a short-term capital. A long-term need or long-term asset needs a long-term tool. Um, I'll give you some best financing depending on each stage of your business. If you're a startup and you have pre-revenue, look into your owner's equity, look into small grants, look into a micro loan if you can receive one, look into a small commercial or a small credit card. If you're in your 1 year or your early revenue stage, look for a small amount of credit that can pretty much size to match your AR or inventory if you have one. Look into invoice financing for larger jobs. And if your business is beyond 1 year and you're in that growth stage, look into a committed line of credit. Look into equipment loans, vehicle term loans. If you want to acquire a building, look at the SBA 504. And if you're a mature business, look into monitored lines of credit. Understand your catbacks. The better you understand your business, you can help your banker, again, advocate for you to move forward. Okay, what is cash management? Cash management is turning sales into cash quicker and paying your bills on time. For example, your AR is your account receivable. That's the money your customer owes you. So to fix that or to keep that clean, you want to bill the same day. You want to use clear terms and make it easy for the customer to pay you back, like ACH, online payments, credit card payments, etc. And also send reminders every 30 days, 45 days, etc. Also consider a lockbox or remote deposit so checks can post the same day. Next would be your AP, and that's your account payables. It's the money you owe your vendors. You want to schedule the due dates, not earlier by default. So you want to use your bill pay with two approvers so you can control the timing and reduce the fraud. You want to also, if you can, negotiate terms where it makes more sense and always protect your vendor relationships. Here's some tools again with cash management you can use to make your cash flow more smoother. Again, ACH payments, AR, AP, lockbox is key. Again, uh, remote deposit, any online bill, again, bill pay with dual approvers, and also positive pay to stop that check or ACH fraud. And talk to your banker because he or she can pretty much tailor those needs to your business to match your um, workflow. Lastly would be your business ecosystem. Now, no one scales alone. So you want to build your business ecosystem with a team that protects your business growth and accelerates your approvals. At the core will be your business banking relationship manager. He or she is a partner that learns your goals, both business and personal, and can coach you on the capital readiness and can advocate for you when it comes to underwriting. Second will be your business CPA or your bookkeeper. He or she is the one who keeps accurate monthly financials like your P&L, balance sheets, your AR and AP aging. Again, clean books are not just for taxes, they are your evidence for capacity. And we discussed capacity 2 slides ago for the 5 C's. I can cover that again at the end of the station. And lastly is your choice. You can add a business mentor or business or somebody that can pretty much help you plan, price, and prioritize your business. That includes advisors like Linda at the Virginia SBDC or any local channel partners. You can pretty much use them to connect you with resources outside of your own network. And again, very important. You want to double check with the current bank or the bank you are interviewing if that bank has an appetite for your industry. A lot of lenders, well, pretty much every lender has a list that they do not lend to as far as industry wise, and a list they tend to pretty much lend to less. You can ask the branch manager. You can also ask your BBRM, and that is your business banking relationship manager, if your industry or your market is an appetite at the current bank. And if it's not, please find a lender or find a commercial bank or regional bank that will take on your industry and fix their appetite, and you will have a better experience. So again, I am Rashad Todd, Vice President at City National Bank. Here is my email, my phone number, and if you have any Q&As, we'll get to that right now. And I will also type into the chat my phone number and email.
Thank you very much, Rashard. I don't see any questions in the Q&A. I would like to encourage people to include
Do you have
some
any
questions
questions
in
for
the
me?
Q&A.
No,
Um,
I
Can you hear
no,
me?
there are no questions in the chat at this point in time. By the way, my name is Courtney Davis. I'm a business community manager. I support the New York market, and I'm here also just to support my colleague Rashad Todd in the DMV market. At this point in time, there's no questions in the chat. So while we wait for questions, I just want to just do a quick highlight of some of the things that Rashad spoke about during his presentation this morning. He spoke about the story and how important, your story is as a small business owner. He really highlighted that and the fact that your financial performance is also being evaluated as banks really sit and look at what you do as small business owner. He also spoke a little bit about some of the tools that are used during financial performance. He spoke about the 5 C's of credit, the 5 C's, and how important those 5 C's are. The 5 C's include character. And when we talk about character, we're referring to the credit history of the person. We're looking at how the person carry themselves. We're looking beyond just the owner, but we are also talking about the managers who manage those businesses and how they operate. He also spoke about the second C, which was capacity, and that refers to the ability of the person borrowing to really repay the loan. This is probably one of the most important of the 5 C's, because what that does is that it really tells you if the person can afford it. And so that's something that the bank really pays a lot of attention to. And then the third C is a capital, and capital really includes things like your savings, your investments, your assets, and how those assets are working for you. And then the fourth C is your collateral. What is it that you plan to pledge to the bank? Is there a need for you to pledge something to the bank based on the size of the loan? And then the fifth one is condition, which he spoke about, and how important the condition of the loan, the condition of the business, the condition of all the factors that are included in the 5C is. So I just thought I'll just reiterate that this afternoon. As we wait on questions, I look in the chat. I'm not seeing any questions right now, but I'm going to hand it back over to you, Rashad.
Yeah, we have a few questions in the Q&A, and they're amazing questions. Thank you so much, everyone. With respect to the Virginia SBDC, again, with their consent, we would pretty much speak in a general basis. I would not advocate for City National Bank, but if Linda approves it, I can talk about the programs we offer at City National Bank. So I will go to one question. Does your bank handles SBA loans to acquire a going concern business with a lengthy history of being profitable? That is a great question. Now, when it comes to when it comes to business acquisitions, your best bet will go through the SBA. They have loans that are targeted for a business acquisition, and a lot of times their terms are extended more than a commercial bank. Would you agree, Courtney?
Yes, I would definitely agree with you on that. The SBA tends to offer better terms, especially for someone who is a going concern and wants to acquire a business. I would probably recommend that particular institution. Banks tend to, and I should let you know that City National, and if Liana might allow us to, as Rashad said, City National is actually a SBA or a preferred SBA lender, so we can help clients with SBA needs or needs that they might have in acquiring business.
Thank you. Another question. What is required in terms of cash reserves, such as a half a year operations for open line of credit and a term loan? So there is no set requirement. When it comes to commercial lending, the underwriters love to mitigate risk. So at least a half a month of cash reserves that can support operations is acceptable. Now, again, there's no set amount, no time duration, but 6 months is a good way to start.
Yes, I might I just add something to that, Rashad.
Sure.
As they talk about opening a line of credit, um, most banks tend to lend to businesses that are in business for, say, 2 years or 3 years. So as far as the product is concerned, there is once you have met that requirement that you have been in business, say 2 years, there's no set requirement as far as how much they have to put down in terms of reserve. But as far as the business is concerned, and it's good for the business to be in operation for at least 2 years to be able to access some form of lending.
Yes, and when it comes to line of credits, depending on the bank and the amount, for example, a lot of banks will have a program where if the amount is less than 100,000 or less than 250, it's what's called a quick app, and that's based off your business cash flow and your credit score. Now, if the loan is a bit larger than $250,000, the line of credit will pretty much be based off of, again, your AR. If your AR or your inventory or your cash reserves or any other form of collateral can support that request. When it comes to term loans a lot of time already has collateral, unless you need a term loan to get debt consolidated or using to buy a property or equipment. Again, that also determines on the amount. A lot of times, cash reserves are key with larger amounts of lending. Another question.
Another
Go
question, if you don't mind, I can read and then you can go ahead and answer,
ahead.
Rashad.
Okay.
It says, do you do you any do you have any special loan programs for startups?
Um, So at City National Bank, we do not lend to startups. Even in our SBA, you have to have at least 1 year of business. Conventional loans, 3 years of business. And for the program that me and Courtney oversee, which is a small business lateral program, at least 2 years of business. Now, again, back to my last slide, if you were to talk to your bank's BBRM or if you have a business mentor or talk to Linda at the SBDC, she can point you in the direction to find a lender such as a CDFI, a CDC, anybody that is targeted towards startups. Example, the SBA is a great tool to use if you're a startup.
Yes, I will say that I will add that there are resources out there for startups, and there are a few SBA loan options that are meant for startups too. So, if you have a startup and you're looking for financing, feel free to sign up to our one-on-one services in the chat, and we can connect you to those resources.
Thank you. Thank you very much, Liana. Next question. What industries your bank does not, it says land, but it should be lend. So it's
Mm.
what industry your bank does not lend to?
That's a great question. Great question. So we just pretty much updated our policy of credit this fiscal year. Our fiscal year ended end of October. So what I can do, I can send you my email, my phone number, and we can connect one-on-one after this call. And I can explain to you what here at City National Bank, what is our appetite for lending.
Okay. All right. Next question. I am planning to buy a business in a different state from the one I live in. Should I approach SBA lenders where I currently live or in the state where the business is located? Note, all of my banking history is in my current state. I am very liquid and have over 800 plus credit rating.
Okay, so you're planning to buy a bit in a different state when you live in. Now, when it comes to a lot of lenders, they would love to see the business address in their bank footprint. So if your bank is banking in the West Coast, the Midwest, and East Coast, and the South, and that business you purchase is inside that footprint, 90% of the chance the bank will take on the application. If the business is outside of a bank's footprint, they may not lend to your business or give you the funding you need to acquire that business. And I believe you asked, was it better to buy a business where you're located? It will make it easier for you. Those kind of questions you can take it up with Linda at the SBDC or your other advisor. Again, she can pretty much tailor your path to go to which way.
And might I just add, Rashad, that SBA is a countrywide program. It's not just confined to a state. So if he's probably using the SBA route, then I don't think it will matter which state he's in because most lenders usually have some version of the SBA available to them, depending on the state. I mean, based on the state that they're in. So I don't
Yes.
think it makes that much difference as far as if he's going through SBA. However, as Rashad rightfully say, banks lend in their footprint. They're not allowed to lend outside of their footprint in most cases. So you probably, when you talk to your banker, you want to talk to your banker, find out if they're a preferred lender, if they are able to do SBA. And if they're able to do SBA, then there's a great chance that even the state that you move into, you might be able to get SBA, probably not through the existing lenders because they might not have a footprint in that state, but you might be able to get an SBA through another lender in that particular state that you're moving to.
Yes. Any more questions? Please, please. There's no bad questions. Anything's on your mind and you've been questioning, you've been pondering about. This is the perfect time to talk to bankers who've been in the industry for decades, longer. Again, any question you may have, it can be about startups, your current business, the current slide we just discussed. Please don't be shy. We have 15 minutes.
I do have a question,
Yeah.
Rashard. Have you noticed in 2025 any changes in lending and the market conditions aspect of the five C's of what lenders look for?
Great question. Great question. One of the huge things that have happened recently, maybe character. As you know, during COVID, a lot of borrowers were borrowing at a reduced interest rate. For example, for real estate, they was purchasing these properties on a 5-year term lease with a much lower payment. And in commercial banking, it's a 5-year term, and at the term, refinance, or balloon payment. A lot of these borrowers are defaulting on these loans. So when you default, that goes into your character and your personal credit or your business credit, and the underwriter can see that. Now, that's the main thing I'm seeing right now. Every bank is different when it comes to their lending appetite and how they respond to the current market conditions. As everyone know, rates right now are coming down. That's good. And borrowers are still borrowing. City National Bank has not tightened our appetite this year, so that's good.
Thank you, Richard.
Next
Okay.
question.
We
Sorry.
have too
Next
many. Yeah.
next question. For a business struggling with bad credit, what is your recommendation for stabilizing the financial picture?
For a business struggling with bad credit, what is your recommendation for stabilizing the financial picture? Now, when it comes to asking your banker certain questions, you want to make sure that the banker understands, credit or goes to an expert that has the skill set in that particular question. Um, your advisor, like as in Linda at the SBDC, she's better to pretty much get that question answered for you or find somebody who can answer that for you. I told my clients a lot of times you wouldn't want to ask your banker about taxes. You want to ask your TPA about lending products because sometimes you may get the wrong information.
And capital
Can I
pathways.
just, sorry,
Oh,
go ahead.
sorry.
Go ahead, Lena. Sorry.
I was just going to add that capital pathways will adopt a credit building part of our program, and we will have advisors that are experts on credit building. So if you would like to schedule a time with us through Capital Pathways, we can ensure to guide you and give you the steps um, to improve your credit. And
Yes, may I just add also, so businesses sometimes do have bad credit, and we do see that, especially small businesses. But what is also fundamentally important was what was going back to the five C's. And the five C's, one of the first thing was character, right? So a business can have bad credit, but what is so fundamentally important is that you, the owner of the business, if you could maintain great credit for yourself, because it makes that much difference when you as an owner have good credit and also have good character, because other banks will take chances with you in that respect, because your business might not really have a good track record, but if you as an owner maintain a great track record, then you will find that there are some banks out there that will do lending to you, the owner, on the strength of your FICO score and the strength of you as an individual. So just thought I'd just share that as we talk about the business and the business credit, that you need to understand that there is a line between you, the individual owner, and between your business, as in your business credit.
We have another question. Thank you, Courtney.
Awesome.
Does attaining a 5-year commercial term lease come with or without a personal guarantee? Like, that's a great question. It's an amazing question. Thank you for that. A lot of times with commercial banks, especially in their business banking line of business, a lot of their loans, if not all their loans, will require a personal guarantee. You will rarely see a non-recourse loan in business banking. Um, Now, depending on the lender, they have different lines of business. It can be business banking, middle market, commercial. A lot of banks also have a separate line where they only focus on real estate. It could be so-and-so bank's realty or whatever the name is. And some of those loans will target a certain property type. And a lot of times they will go through Freddie Mac or Fannie Mae, and they may be non-recourse loans, but you might have to meet the liquidity minimal. But when it comes to commercial banking, and if you're getting a small business loan or you're buying owner-occupied property, a lot of times it will require a personal guarantee.
Okay. Uh, thanks for that, Rashad. Next question, and this is probably to the presenters today. Can you please confirm the contact information for Capital Pathways, Lena?
I think she will put
Of
that in the chat.
course, I will include it again in the chat.
Awesome.
These are amazing questions, everyone. Please, 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 please keep on answering. We love answering questions. Because again, the whole point of the program is to pretty much educate you guys and give you guys a lot of the inside scoop or behind the scenes that a lot of customers don't get. So any questions you may have or may have in the future, please let us know.
I just put it in the chat. If you cannot see it or anything like that, please let us know, and I am happy to also send you an email.
Okay. So I see we might have one more question. What is the interest rate, and is it fixed or adjustable? Great question. So are you referring to a term loan or are you talking about line of credit? Because when it comes to line of credit, a lot of times the rates are adjustable, as in they pretty much is variable. When it comes to term loans, you can get it fixed or variable, depending on which product you want to go with, and the current rate depends on the bank. If you're asking what City National Bank's current rate is, I can put out me and Courtney's email in the chat and our phone numbers. You can give us a call for one-on-one session or reach out to Lena at the VA SBDC and she can get in contact with me or Courtney or anybody on my team. And we can pretty much sit down with you, have a needs assessment, and go from there. And I can discuss with you what the current rate is at that moment for what you're looking for.
Yes, thank you. We can please reach out to us and in the link provided, and then we will connect you to Rashard um and um and can go from there. If
We still
you're
have about 7 minutes to go. Any additional questions?
Mhm.
Yeah, and if no more questions, we can pretty much give you guys back the time, 5 minutes to spare. But
Yeah,
again, like me and Court spoke on earlier, key thing to take away is you want to make sure that you have a BBRM at your current bank, the business banking relationship manager. He or she is the key to your banking experience at your current bank. Second, you want to make sure your bank has an appetite for your industry. A lot of times, if you don't act, closed mouths don't get fed, and you may have a bad experience depending on if the bank does not have an appetite for your business. So those are the two main things that I can leave you with today. EBRM and making sure your bank has an appetite for your industry. Ask your banker, ask the branch manager. You want to find out immediately because banks do change their appetite depending on what's going on in the market conditions or how their policy is, but you want to find out that out immediately before you want to move forward with application.
There's a quick another question that came in, Rashad, and it says
Yes.
for a line of credit, what would be the minimum underwriting requirements in terms of credit score, credit utilization?
It's a great question. You got all the questions today. I love it. It's a great question. For the LOC will be the minimum underwriting requirements. Again, it pretty much is based on the loan amount, and every lender is different. For example, at City National Bank, we have a program where if the loan amount is under $100,000, it's score based. Whatever your business DSCR is, and if it cash flows that request, and if your credit worthiness applies to our credit minimum. Now, each bank is different. So conventionally, your credit score, sorry, your FICO score should be at least a 680 or greater. At City National Bank, the program that me and Courtney oversees is the Small Business Ladder Program, where a lot of our terms and criteria is a bit more accessible for business owners. For example, if banks conventionally are requesting 3 years in business, we're doing 2 years in business. If the banks are requesting a FICO score of 680, we're requesting at least a 660 or greater for your FICO score. And along if your business cash flows can support that current loan and also your business, I'm sorry, that can support that request and also your business current annual payments if you can cash flow that request and your FICO score meets our worthiness, a lot of times you may be approved. One more question?
Yes. So next
Okay.
question. This person says they will reach out to you in early December with additional questions.
Thank you
So
so
I'm
much.
sure you look
Looking forward
forward
to
to that.
your contact. So we
Yes.
don't want to overstep with you guys and overspeak and go past our time today. So again, the key takeaways will be again the BBRM and asking your banker or your bank what the industry is for their appetite. And I want to thank Linda and her team at the Virginia SBDC for allowing me and my colleague Courtney to present on behalf of CNB today. And again, if you guys have any questions or any more questions, give Lena a call, use the link in the chat. She'll get to me or Courtney, and then we have a one-on-one for a needs assessment. It'll be this week, next week, it'll be next year. We might have one more question. Okay, that's all the questions
Yes.
today.
So thank you. Yes. All
Can you
right.
ask me a question?
It was certainly a
Oh,
pleasure. Sorry. Go ahead.
I wanted to, well, thank you, Rashard and Courtney and Mary for participating in today's webinar and Rashard for presenting for us. It was a very valuable presentation, and we always all learn something new from these presentations. So thank you again, everyone, for participating, for your questions, and Rashard and the team for the presentation and Q&As. I hope you have a great rest of your days. And again, please reach out to me via email or the link to set up an appointment and discuss how we can help you and connect you to Rashard and his team.
Thanks so much. See you,
Thank
everyone.
you.
Have a great day.
Bye.